You will be surprised what impels the Fed to move in the direction they're going to get going here.
Art, as you're talking, that's it. That is a new closing high for the S&P 500. We surpassed 2930.75. We've waited a long time for this, Art.
Certainly have. You know, it's been a kind of slow, steady move, and you know, they could taste it all the way, but nobody was going to run for it.
We're still almost 10 points away from the all-time intraday high, though, as well. Is that the key level to watch after we get a close here today, especially if we do close at a fresh high?
Yeah, I think the interim high is the one they'll be watching. You know, the argument for the skeptics now would be, okay, Morgan, you made a new closing high, but we're not closed. So,
yeah, that's why I bring it up.
Right.
Fascinating picture. I guess, I mean, you got the president obviously ready to lean on the Fed however he wants. You got Europe playing along. Even if China backs off on their own stimulus, at least, I mean, it's ostensibly because they feel like they sort of did their job coming out of December.
It was amazing this morning. The gentleman who looks like he might be the logical successor to Draghi backed up and said, well, I'm not sure that we need to get away from negative interest rates right now. I actually think they should. I think it would help their banking system a great deal more. But if he's willing to say that, that's about as easy a statement as you can get. And keep an eye on Italy. I think, you know, we've been watching Germany. That's slowed down. But Italy is showing some signs of fraying around the edges. So we'll keep an eye on that.
I want to ask you about sectors. The outperformer today is healthcare. And we know that it underperformed over 10 days by the biggest margin in a decade. So why would you want to hang out in any defensive sector if you thought the world were really starting to find its sea legs?
Well, I think what you're seeing there is an overcompensation. You're right. Healthcare has been inordinately weak. This Medicare for all and the fear that they're going to attack the pharmaceutical industry has probably damaged them too much. So I think what you're getting is a little bit of a buyback here. That's all.
I want to bring in Bob Pisani as well, who's on the floor of the New York Stock Exchange and keeping a close eye on these moves in the market. Bob,
well, go ahead.
Go ahead.
Sorry. I think the important thing about what's been happening is the reason we're seeing this move up is twofold. Number one, there is no global economic meltdown as there was feared in December. We are seeing Europe more stable and European stocks more stable. Europe's up 16% this year. That's in line with the S&P 500. That hasn't happened in a long time. China not only has stabilized, their stimulus program appears to be helping not only stabilize but improve China overall. Shanghai's up 30%. Those are the two biggest causes of global worries that we had that are now less of an issue. We always know, of course, the Fed's still on our side, of the side of the markets overall, in terms of easing. So those are two major issues, global slowdown and Fed on your side, that are helping. Now we have the earnings situation. They cut the earnings too much in December, and you see what's happening today when you get United Technologies and Lockheed Martin beating by double digits. Those are very large beats, unusually large because the analysts cut too much, and now everybody says, okay, maybe we were wrong on that. I think there's two or three things missing. Number one, we need a breakout on the major index, the S&P. We're sitting right near there. Number two, we need more individual stock breakouts. It's actually pretty modest. There's not a lot of big stock breakouts. Yesterday, Microsoft was the only new high on the Dow Jones Industrial Average. And finally, Art and I go back and forth on this for months now. The volume. It's been terrible. Volume has been very, very low for a while now. And a lot of us are just saying, forget the volume. We should look at the dollar volume of trading rather than the stock volume of individual stocks because, frankly, you've got companies that never split their stock right now. So you got $1,000 stocks sitting around, like some of the FANG names. And so the volume looks on the low side. I'm not sure that's as valid as it used to be, that we need some kind of volume breakout. We're certainly not getting it right now.
You did say going into earnings season that people were overly pessimistic, and so far your call is playing out beautifully. Dominic Chu back at HQ, where we looked at some of the sectors. I'm not sure what you're focusing on, though.
I mean, this idea right now, we talked about the sectors that have been leading the way higher. It's always a little comforting for the bulls out there to feel like technology is helping to lead the way higher, which it is this time around. No surprise maybe that healthcare, after being an outperformer, given the market melees in the fourth quarter of last year, was the best performing sector, that it's underperforming now. What's curious is the move in in treasuries. What's curious is how it's playing out with regard to small cap stocks overall. If you take a look at the treasuries across the curve, we are still a little bit lower in terms of yield. So despite the fact that we make this run towards at least record highs, closing highs right now towards record intraday highs, the Treasury complex still appears to have a little bit of a bid underneath it, and that's pushing yields just slightly lower. The key part that we're watching as well is what's happening with small cap stocks. They had been an underperformer since the real ratchet back up towards highs here since the December 24th lows. But on a year-to-date basis, we are seeing a little bit of activity now returning to small caps. They are not at record highs like the S&P 500. They are not making runs towards it as much like the Dow or the NASDAQ composite. But still, as you start to see a little bit of outperformance there, that might be a little bit of fuel for the bulls as well. In today's trading, we are seeing the small caps up by about 1.5% for the Russell 2000, so that bodes well. But as we take a look at the overall picture for markets and the setup, it is comforting, yes, again, that we are back towards these record highs, but it hasn't been like there's been this massive breakout to it. Remember, for so long, we were focused on the S&P 500, 2,800 to 2,815 levels. Now that we've gotten above it, it's been a slow grind, and earnings season should be helping, but it's not propelling things at least as far as some would like to see, given the bullish feel that we have at record highs, guys.